Hey guys, welcome to Pinstock. Today, we will know how to trade on Binance Futures trading. Now, for first timer, futures trading might look complicated. But don't worry, I'm here to break it down for you. Imagine you're a farmer and you want to sell your crops in the future. You can use future contract, a type of a contract that will lock the product's today's price for a sale that will happen later. That's the basic idea behind futures trading. In the crypto world, futures trading lets you speculate on the price of cryptocurrencies like Bitcoin or Ethereum without actually owning them. You're essentially making a bet on whether the price will go up or down. Futures trading can be a great way to potentially profit from market movements, but it's important to remember that it comes with risks. Just like you wouldn't jump into farming without understanding the basics, you shouldn't jump into futures trading without knowing what you're doing. So let's get started. Firstly, let's look at exchanges or platforms where we can do futures trading. We have selected Binance platform, which is one of the biggest cryptocurrency exchanges in the world, and it offers one of the best platforms for futures trading. Binance Futures allows you to trade a variety of cryptocurrencies with leverage, which means you can amplify your potential profits and losses. Let's break down some key concepts. Let's just look at leverage. Imagine you want to trade with 1000 value, but you believe the price of Bitcoin will go up by 10%. With 10 times leverage, you can essentially trade with 10,000, potentially increasing your profit tenfold to 1 lakh. However, leverage works both ways, and your losses can also be magnified. Long-short positions. When you go long, you're betting that the price of the cryptocurrency will go up. And when you go short, you're betting that the price will go down. Now let's look at margin. To open a futures trade, you need to put up a certain US dollar amount of cryptocurrency as collateral, which is called margin. If the trade goes against you, your margin will decrease. If your margin falls below a certain level, your position might be liquidated, meaning you lose your initial investment. So let's look at expiration date as it affects future selection. Some futures contracts have an expiration date, so these future contracts will end on predetermined date, while others are perpetual, meaning they don't expire. Understanding these concepts is crucial before you start trading futures on Binance. I hope you're ready to jump into the world of Binance future trading. Here's a step-by-step guide. First, create a Binance account. Head over to the Binance website and create an account. You'll need to complete a verification process to start trading. Next, enable futures trading. Once your account is verified, navigate to the futures trading section and enable it. Then, transfer funds. You'll need to transfer funds from your spot wallet to your futures wallet to start trading. Choose your leverage carefully. Start with lower leverage, especially if you're a beginner. Finally, open a position. Decide whether you want to go long or short on a particular cryptocurrency and place your order. You can choose between market orders, which are executed immediately at the current market price, or limit orders, which are executed only when the price reaches a specific level. Remember, trading futures involve significant risks. It's essential to understand the platform and the risks involved before you start trading with real money. One thing that helps a lot in futures trading is how good you manage your risks and trading strategies. Basics of futures trading strategies is important. Let's talk about managing risks and developing trading strategies. Risk management is crucial. Never invest more than you can afford to lose. Futures trading is highly volatile, and even experienced traders can lose money. A stop-loss order is an instruction to automatically sell your position if the price drops to a certain level, limiting your potential losses. Similarly, a take-profit order automatically sells your position when the price reaches a certain profit target, locking in your gains. Developing a sound trading strategy is crucial for success in futures trading. Consider factors like market analysis, technical indicators, and risk tolerance when formulating your strategy. Futures trading can be a thrilling and potentially profitable endeavor, but it's not for the faint of heart. It requires careful planning, risk management, and a deep understanding of the market. Remember, continuous learning is key. Stay updated on market trends, news, and trading strategies to improve your chances of success. So that's it. See you guys in next video. If you have any query, write it down in comment section. Remember to trade responsibly, manage your risks, and never stop learning.
This video is intended solely for educational purposes. And we do not offer trading tips or advisories. The content presented reflects our best knowledge and we have no intention of causing harm to anyone's reputation or opposing any specific views. We welcome suggestions and emphasize that the video represents our perspectives on the discussed topic. We have been a NISMBA certified mutual fund distributor for the past 7 years. NISM was established in 2006 by the Securities and Exchange Board of India (SEBI). We are not SEBI registered financial advisors. We request all the listeners to do their research before mobilizing their money or making any financial decision.